Hello traders, the title of the video is how to trade a breakout signal at a cycle point like a pro. What is a cycle point and how to trade a breakout trading signal at a cycle point. Well, without too much blah 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 from my side, a cycle point is the point where the price is completing a 180-degree turn. So you can see price going down, you see here, going down, and then it starts going up and return to the cycle point where it's completing a 180-degree turn. All right. So we can see the same thing here. Price goes up, all right, all the way up here, and then return back to the starting point, completing a 180-degree turn. That's again what we call a cycle point. Very often we see also breakout trading signal at a cycle point. I have been talking about a different type of breakout trading signal. We have talked about 4 types of breakout trading so far at the Pro Traders YouTube channel. All right, so check the playlist about breakout trading tips and tricks by the Pro Traders YouTube channel. All right. The financial instrument that we're going to use for the demonstration of breakout trading signal at the cycle point is Marriott International Incorporation, Epic MAR, Mike Alpha Romeo. The cycle point very often is relating to chart pattern like a round bottom, okay, inverted round top, all right. It's also relating to the inverted head and shoulder chart pattern, the head and shoulder chart pattern, when a price will form a head and shoulder chart pattern and return to the neckline, either the neckline of the inverted head and shoulder chart pattern or the neckline or the V pattern or in the neckline of an inverted a V pattern. But the most important thing we need to understand is that the price is completing a 180-degree turn. All right. So if you look on this chart, there was a beautiful one here. You can see this is a nice one. The price went down. You can see here, and then now it's completing a 180-degree turn. Right here, we have a cycle point. Very often, we are likely to see a breakout at this point, especially if the prior move was bullish. So the dominant force was bullish. So who is controlling the market? Is the bullish traders are controlling the market at this point in time. Price goes down. Now why is the price returning back to the starting point? Because people are buying it. All right? But there is a warning. Don't just buy. All right? If you just buy, you are buying like the old days. The market is becoming very, very sophisticated. There are contrarian traders, all kind of market participants out there. The algorithm, all right, the trading algorithm, and don't just buy. As always, use a different time frame trading method. We can apply this strategy for day trading, swing trading, position trading. All right, so you can find it on a 4-hour time frame, use it as a trading setup, and then break it down on different time frames. All right. So here you can see the tail of this. I'm on the monthly channel. You see the tail of this candlestick bar here. This one was trying to retest it, and then from there, pew. This is a breakout at the cycle point. Beautiful, very nice. This is nice. Bullish move from a V pattern. Another pattern that I want to talk about is the cup and handle chart pattern. So the cup and handle chart pattern, you have something like a cup. By the way, if you want to know more about the cup and handle chart pattern trading, you want to understand it clearly, go to www.stochastic-macd.com, click on cup and handle chart pattern. So price will pull back from what we call the handle. So this is the cup here. Let's put a bit of color into it for pleasing your eyes on your high definition screens. All right. So this is the cup and this is the handle here. Powerful chart pattern, by the way. And then, okay, usually the handle will pull back to the 50% Fibonacci retracement level of the cap, but that's the theory. So go to www.stochastic-market.com, click on cap and handle chart pattern. So we have the neckline here. So here, the price has completed, okay, 180-degree turn, but for one reason, it goes down first. This is to fool people that the price is going to go down more. But as it goes down to the 50% level, here it is, it goes back again to the cycle point, and very often you see it will break a bow, retest, and then boom, up, all right? So though the cap and handle, the price will return to the cycle point here, you may think that it has failed. Sometimes you will just pull back to the 50% Fibonacci retracement level of the cap, and then again start going up, okay, and then it breaks above that cycle point, the line here, and then it finds support and boom, up, all right? So remember, inverted head and shoulder chart pattern, one of my favorite bullish chart pattern. The cap and handle chart pattern. For a bearish one, we are talking about head and shoulder chart pattern. We are talking about the neckline as the cycle point line, all right? Okay, the inverted V pattern, all right, price turning like this. Preferably, we prefer for inverted V pattern, price going down first, all right, price going down first. Price going down first, and then form an inverted V pattern. Then it breaks below that neckline, retest, and then boom, down. This is a trading setup. So do not assume that definitely it's going to go down. I'm trying to get your attention. Or do not assume that you definitely go down. Anything is possible. You can come here and then bounce back again. So you may say, Joe, what were you talking about? I'm talking about be ready to buy and be ready to sell without assuming anything. If there is a trading setup, just wait patiently and implement a top-down trading method. If the signal fails, close the trade. Try to be a little bit more disciplined, and all right, that's all. Sometimes talking about the cycle point breakout can be a little bit complex for some traders because they will miss some opportunity. So what you see, because this is what we're talking about. When we are talking about the theory, we want to simplify things and show traders very quickly, all right? But the reality of the market sometimes can make things a bit complex, and traders sometimes may not see, okay, the trading setup. So instead of the price coming down like this, nicely forming a V pattern, you may do something like this. Sometimes you may see you go down, do something like this, all right? And then you may say, George, what is the V pattern? And then go up like this, and then do like this. So it's hiding, okay, the pattern. And then you say, what is the V pattern? And then it does something like this. But slowly but gradually, finally, you return to the same place. All right? Though it's not a perfect V pattern, it completed, that's why I'm saying to you, you need to understand what's happening here. It has Z completed and a 180-degree turn. It did. But blah, 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 blah. But it returned to the cycle point. So this is the situation here. You can see 1, 2, 3, 1, 2, 3 before it came to the cycle point. But for some traders, they may not see it that the price is now at the cycle point after all kind of blah, 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 blah. But it finally returned there. And what it did again, it breaks above nicely and retests it here on the monthly chart, touching the moving at 14, boom, up, deviation again to the moving at 14, up, the pullback, you see? So understand that it's not as straightforward as I draw it on the chart. Can be sometimes a bit messy, and trader may not see it. All right. So you see the one, this one here. You see this V pattern form first. So if you watch carefully, down and up. But look, it came down again, forming a cap handle. All right. Now it goes to the cycle point. Found a resistance, came down again. So at this point in time, you see it breaks above, you retest it, you will be positioning yourself looking for signal. If there is no signal, don't force it. If the signal fail, come out. So that is the situation here. Because sometimes a lot of traders may learn something and they try it the first time and then it didn't work. So instead of getting a little bit emotional and say, oh, all right, just take up and say, what went wrong here? Try to find out why it did not work, okay? By asking those questions, sometimes you will discover something new, things that you were not expecting. That's how I discover a lot of things in the financial market, because I always want to understand why it did not work, why this trade failed, why it worked last time, why it's not working now, why have I missed, and so on. And so you discover a lot of things that other people are not paying attention to, all right? Yeah, so here you see, didn't go up straight away. It came back again, 1, 2, but the cycle points remain the same. So I'm just talking about this one now, so you can see it and know that as you start applying this method, breakout at a cycle point, you will come across situation like this when you'll be wondering, you see, this is 2009, you see, 2009, 2010, 2011, and 2012. You may say, Joel, you were talking about it, that this stock is going to break above it. Where is he? Where is he? Where is he? Well, until, all right, it confirm it, that's the only time we can trade it, all right? If there is none, there's none, nothing you can do about it. The signal failed, just close it, go, and look for another one. But don't forget, sometimes it can take long. Look, 2009, and finally in 2014, before people... So a lot of traders were attempting to buy this stock, you see. So all these pullback, people are buying, removing 14, below. The patterns remain the same. It's about, has it completed 180-degree turn? Yes, if it did, we are watching it. Remember that sometimes the price may complete a 180-degree turn only to form a cap handle, which in this move down may go all the way down to the 50% of the cap before it go up. Sometimes it may not go down all the way to the 50%, as you can see here. It's just a tiny pullback to the moving of 14, go up, but didn't break very much above the neckline, and so on and so on. So in order to, this is a powerful trading method, but as I say to traders, we must constantly, all right, use, all right, different time frame trading method. Daily chart, hourly time frame, 10-minute time frame, all right. Weekly chart, 2-hour time frame or 4-hour time frame for the signal, and then 15-minute time frame, all right. Monthly chart, daily chart, hourly time frame, all right. Quarterly chart, 3-day chart or weekly chart for the signal, all right. And then 3-hour time frame for the entry. If you don't have 3-hour time frame, use 4-hour time frame for the entry. All right. Yearly chart, monthly chart, daily chart for position trading. All right. 4-hour time frame. All right. 15-minute time frame, 3-minute time frame, or 5-minute time frame for the entry. Always. By doing that constantly, by polishing the ability to use different time frame, you start analyzing the chart, okay, more efficiently instead of using only one time frame. The setup is very important for us to find a valid trading setup. But now, if the setup is in place, we wait for the signal. All right, signal is fire. Select a low risk entry point to enter the trade without ignoring the economy news, the fundamental that can also change the dynamics of the market. So you remember, you go to the airport, you want to fly, they may say, oh, no, the weather is not nice. Wait a bit. This is about the market environment. Have I said enough today? I think so. We don't want the video to be too long. So this is about how to trade, okay, breakout signal at a cycle point like a pro. Talking about like a pro, we are talking about using different time frame when we identify, okay, a valid high probability a trading a setup. All right. So when a financial instrument completes, all right, 180-degree turn, returning to the starting point either after a down move or an up move, forming either a V pattern, an inverted V pattern, head and shoulder chart pattern, inverted head and shoulder chart pattern, cup and handle chart pattern, and so on. The most important thing we want to verify, has the price completed a 180-degree turn? Yes. Now, we can expect a breakout or a breakdown. If there is one, then we will implement a different time frame trading method to trade it. If you have any question or suggestion, okay, feel free to put in the comment section. I read all the comments all the time, and I'm recording video constantly, all right? And I will answer your specific question, all right? If you think that this video has been useful to you, please let me know by giving us the thumbs up. If you think that, George, this is another blah, 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 please let me know. I want to know, all right, by giving us the thumbs down. If you think that this video is an essential tutorial for other traders, feel free to share it on Google+. on Twitter, and also on Facebook. This is the end of the tutorial talking about how to trade breakout signal at a cycle point like a pro. The financial instrument that we were using for this demonstration is Marriott International Incorporation, an American stock that belongs to consumer cyclical sector. Until the next time, enjoy yourself and be very happy. I'll speak to you soon.